Hello, welcome to Property Nomads. We are back today with Marc Champ of Wharf Financial. Marc, how you doing?
I'm good, thank you. Thanks for having me on again.
No problem at all. Just for caveat, for those that listened to the last episode or so, recording this just before I flew out to Mexico, but by the time you listen to this, I will be in Mexico, so we're doing some recordings there for the next couple of months. Marc, we're just saying quickly off there, you were mentioning that the last few weeks you have found, from not just from Wharf Financial point of view, but from speaking to other financial institutions, lenders, etc., you describe things as being somewhat difficult. Could you just elaborate on that a little bit, just give people an idea of what's been going on recently?
Yeah, it has been difficult. And August is always a weird month because there's a lot of holidays. And we deal a lot with the Orthodox Jewish community, and it appears that they take most of August off. They do their 2 week break, a lot of them. So it is a strange time, but we've just seen so many deals that are difficult. So usually when you get a difficult deal, you can speak to the lender and you can, tell them about the mitigating circumstances, etc., and how we should be overlooking certain things so that we can get the deal through and it's still, responsible lending, all that sort of stuff. But at the moment, there is no flexibility, and the parameters have come in. I was just doing a loan with somebody, a bridging loan, and not only did the lender take a week to come back to me, but the bridging loan was at 70% loan to value, commercial asset, customers just bridging before they do a conversion of the uppers into residential. And we'd been 70% all the way along, no questions asked. And then now the valuation's back and we're just waiting for the full offer to come back in. They said, oh, actually, we're only going to do 60 because the planning application isn't actually in with the planning office. And I'm like, well, they're going to do it. Whether anybody can put a planning application in, so it's neither in or there. Whether there's a planning application, I would understand if the stipulation where we've got to have a planning approval, but just to have a planning application in, we could do that. That's no problem. And it's just so the customer gets drawn back to 60% from 70%, and means they've got to now find another £30,000. And it's like, why do that? It's just, and these are the sorts of things I'm seeing the lenders do. I'm trying to think of other examples, but we've seen valuers downvalue literally everything at the moment. Everything's coming up. We had one that was 20% down. We had another that came in light on the rental figure, so it made the deal not work. And to actually get a deal from start to finish over the line is very tough to do in this market, because you've got stress test problems, you've got GDV problems, so the actual values of the property, you've got extra criteria that the lenders have put in, you've got lower loan to values, so therefore higher deposits, and it's really tricky. It's very tricky. But like I've said all the way along, where it is tricky, that's where the good people make their money. There's opportunities, and there will be more. So yeah, so that's a little rant about how difficult everything is. But yeah, you asked the question, so you got the answer.
No, this is true. This is the joy of being a podcast host. You get to ask these questions and just sit and listen for the answers. I think that's a very interesting aspect that you raise, to say that obviously there's always going to be opportunity, and it's in these challenging circumstances where good brokers, obviously like yourself, will be able to rise to the top, purely because you're going to be able to navigate, work with your clients, and just have that level of communication where when stuff gets done, thumbs up, win-win for everyone. If something doesn't get done, from what I'm hearing, and obviously we've worked with you before, it's not really a case of broker has messed up. It's always, well, actually the lender X, Y, and Z this has happened. And yeah, from my understanding, when it's phrased like that and it's the lenders playing around per se, then just having that communication between yourself and client, that puts everyone in a good light, if that makes sense. I'm now waffling, but hopefully that makes a bit of sense.
No, it does. It does make sense, and you can often find a little quirk in a lender's criteria where you can argue the case if they come up with something, and it really can make a difference. And we've got a transaction we're looking at the moment, and there was just a little quirk in the lender's terminology, and it was all to do with being a first time landlord. And we found that little quirk and we pointed it out to them. And anyway, they're hopefully going to do the transaction for us now. But they don't often like to be proved that, yeah, they're wrong. But anyway.
No, of course not. I think since we last recorded, I think we both mentioned that we thought the Bank of England rate would go up, and it did do. It has done to 5.25%. You mentioned as well that August normally is a bit quiet in terms of property, which we've found our end as well. Q4, September, October, so forth. I think we're going to start getting to the stage now where the fee season is going to hit the fan big time. This might be why we're seeing maybe some down valuations, people just becoming very cautious. And there's a multitude of reasons we've covered before, but I would say an extra reason on top of that is Evergrande or Evergrande, however you want to call them. They filed for bankruptcy. Massive Chinese firm, house building firm, and also I think it's Country Garden, who might be on the risk of default. Now these are multi-billion property companies, and if that's happening in China, this might have a ripple effect worldwide, which could hit our shores sooner rather than later. Maybe that is why you're seeing, when you're dealing with your clients, more caution now than maybe 3 or 4 months ago.
Yeah, potentially. I think the caution, it has been coming. And if you think back to, I don't know how long ago it was, but we were just talking about what we thought would happen. And I remember doing an episode with you, and I think we predicted that rates would go up to something like 5%. And this was after COVID, we were saying this. So it was a little while back. And now they're at that level that we suggested they would be. People are getting a bit nervous, but this was always coming, and I don't see why people are nervous. I can understand that transactions don't work as well. If you've not saved up, it's not as easy. But do you know what? That's not such a bad thing. I think the money was too cheap, and it was a full sense of security for a lot of people. So I think the rates are actually at a level where they probably should be, to ensure that you actually have to have a good amount of skin in the game to be able to make money. Because when you're not putting it in and you're borrowing from an investor, and then you're borrowing a 80% loan to value as well on a really cheap rate, it's too easy, and it shouldn't be that easy to do it. It needs to be a bit more difficult, and you need to have a bit more skin in the game. And I think that's where we're at the moment. And I think the interest rates and where they sit is where they potentially should be. And they're not far off where the average is in throughout time. So
yeah, I think the average is about 5% since 1694, which is year of the Bank of England was born. I say that very loosely. So that's.
Did you know the Bank of England was started by a Scottish person, and the Bank of Scotland was started by an English person?
I didn't know that. Oh no, well, but see, property nomads, we are learning something new every day. That's fascinating. I did not know that. So, and I think the other thing that we pointed on before, and again, this is probably going to stand the test of time, is we said when rates would increase, that the knock-on effect isn't felt straight away, that the effects will take 12 to 18 months to filter through the economy. And far as I'm concerned, we're starting to see that now, and this will continue into 2024. If we're unlucky, that might carry on to the start of 2025. All of that doom and gloom, and it'll probably be the same in September. It could get worse. All of that being said, there are some substantial potential changes to planning applications, the prices that you pay, but also they're looking to change a lot of the planning rules and regulations when it comes to commercial buildings. And I'm sure moving forward, you're probably quite excited about that, because that probably equals quite a new lot of business for you, possibly next year.
Yeah, so we hosted an event in Brentwood on when was it, Wednesday night, and we had somebody who specialises in commercial conversions present. So that was very interesting, and there is definitely scope and more of an opportunity, it appears, to do these sorts of things. And they were talking about, there's, I don't know how many thousands of unoccupied commercial premises in the UK, but it is difficult to do, and it is risky still. Even if the planning permission regulations are loosened up, you've still got to make a profit, and you still got to know what you're doing. I literally just had a call before we came on from a guy who wanted to do a conversion type project, and he'd used our development finance tool, and he didn't have a clue what the figures meant, and I had to talk through it with him. I just go through each line by line and say, this is going to cost about this much, and then this will cost this much, and then he said, well, I'm not going to make much profit then, am I? And I was like, well, no, you're not going to make much profit. And he's ready to put an offer in on a property, and it's like, how can this be the case that people are putting offers in and moving forward when they don't have the experience? And I know you can only get the experience by doing things, but actually learning. And I asked him, I said, have you done this sort of thing before? He's like, yeah, I've done it before. I was like, how have you done it before if you don't understand these fundamental figures? And then another question, can I do it on a buy to let? No, you can't. You can't do a conversion on a buy to let. You'll be breaching the terms of your buy to let, and you only get the money to be able to buy the property. You won't get the cost, the funds to fund the works as well. So no, you can't. He was like amazed. I can't just do it on a buy to let. No, you can't.
Yeah. I think I'm lost for words on that. All I can do on that is say that is why I always speak to a broker. That amazes me. Mark, you mentioned there your the development finance tool. We'll caveat and say we do have a link in the show notes. So for people that are looking for development finance, please do have a look at the show notes on podcast. If you're watching this on YouTube, look in the link below.
I should say, after our last talk we had on here, there was a few of your listeners who actually used it and got in contact via using the tool.
Fantastic.
So they found it really useful, and we're seeing such high volume on it. It's gone a bit crazy. People are using it to, I suppose, get ahead and make sure the numbers do work, and it's such a easy system to use. And again, we had a run through on Wednesday night showing a room of 50 people, and they were all just amazed by how quickly you can get terms for development finance, and it also does bridging finance now. So yeah, it's a very good thing.
Well, it might be an idea to, as I say, links in the show notes for people listening. What it might do, Mark, at some point in the next couple of months is, what I appreciate for podcast listeners, this might not be ideal, is maybe we could record a quick 5-10 minute video, plot that onto YouTube, and then that way people can see it as well. But no, I'm glad that people are taking action, and thanks for you for supplying the link. We put it in the front of every single set of show notes now moving forwards. And Mark, I think that's everything I've got this end. Next time you speak to me, I might be a married man, i.e. my testicles might be in a jar, on the shelf
Yeah.
somewhere, and I might be allowed to podcast. I'll have to speak to the chief first.
Yes.
But yeah, we'll have a chat for Mexico, and let's keep an eye out what goes on. I think Q4 is going to be quite dangerous, but then again, you know me, I'm a bit doom and gloom, but even a broken clock is right twice a day.
It sure is, and I think you may be right. I think it's very important when people are looking at funding to check who the broker is, check who the lender is, and where their funding is coming from. Because yeah, you don't want to be with a lender who loses their funding and can't fund your deal anymore.
No, 100%. Well, Mark, thanks again for your time. Wonderful stuff. We'll catch up again in a few weeks.